Zac Prince, thanks so much for joining us on Wall Street Unplugged.
Hey, happy to be here. Thanks for having me.
Well, new guest for the podcast. So I know it's difficult when people ask me, hey, tell me about yourself. But I want to bring my audience in here and learn something about you because you were one of the early adopters of crypto. And let's go there because I know you in innovation and I know that you invested in fintech and online lending and bringing that all together. But when did you see crypto where you were investing in it or you just looked at it and said, wow, you know what? This has the power to disrupt so many different industries.
Yeah, so probably end of 2014, second half of 2014, I was actually writing a personal finance blog talking about all things fintech, online lending, robo-advisory, investing in commercial real estate on online platforms, and the work that I was doing for that blog, which was just a side project, but it led me to Bitcoin. And I was working in fintech at the time, and I had realized through my time working in fintech that a lot of what happens in fintech is just companies creating a new user experience on top of the same kind of financial plumbing. So you've got a mobile app that enables you to do things instead of going into a bank branch, or there's automation built around certain types of payments or lending, whereas before it was a 2, 3, 4, 5-day process. But behind that new user experience was still the traditional financial system. Oftentimes, fintech companies partner with a bank, or they're using banks to actually move the money from point A to point B behind the scenes. And so that was the context with which I learned about Bitcoin. And I remember thinking to myself, wow, this is actually something that is truly innovative, not just on the user experience, but it's a completely new asset. And it's built on top of a new technology that has enabled, for the first time, a global, fully digital, decentralized payment network that enables folks to move money or value over the internet the same way that we already move information around the world really seamlessly using the internet. And so it really struck me initially as just something that had the potential to be incredibly disruptive, more so than traditional fintech applications. And when I looked at it that way, I decided I just had to buy some. And I was screaming on this blog that wasn't particularly popular that I thought everybody should, allocate a little bit to it if you had a part of your assets that you were willing to put in something that had a high risk profile, but a very high potential upside if things worked out.
Now, even as bullish as you were back then, I'll even go into 2017 and you're still bullish on this industry. Did you ever think it would be where it is today, where 60,000 Bitcoin, and we'll go over the partnerships that you have, which are amazing, massive companies, very well-named people in your company, BlockFi. We'll get to that in a second. But did you think we would get here this quickly? Does this exceed your expectations, or is it, hey, I told you so?
I think it's a little bit of both. I guess I kind of toggle back and forth. I'm a pretty humble person, but I was also very bullish on what could happen with the asset class and what that might look like in terms of the evolution of the industry. Again, really stemming from a lot of my learnings in the fintech and online lending sector, which started off as just technology companies, but then was adopted via partnerships and financing with traditional institutions, and then ultimately kind of concluded in terms of the evolution with banks responding and creating their own products to compete with the fintech companies that were seeing success. And so at times I've thought that we're moving too slow. At times I've thought that it's moving faster than I would have expected. So it's a little bit of a mixed bag. But I don't think that we are anywhere near full maturation. I think that myself and anyone else who's working inside the industry day in and day out would tell you that the pace of adoption is accelerating, not flatlining or decelerating. And so there's still, in my mind, tons of upside in the same way that when I originally looked at crypto in 2014, I thought that there was tons of future upside, because in the grand scheme of things, the asset class and what's happening in the ecosystem is still really, really small in terms of the markets that it could potentially disrupt or take share.
Yeah, and when you look back, and now it's 2014 to 2015, like I said earlier, you have a background in online lending and fintech. It's still early on in this trend, right? So it reminds me of the internet, where social media wasn't a big thing until 10 years ago, 9 years ago, 8 years ago. But the internet, you didn't know what it was going to evolve in. Everybody knew it was a big deal before it disrupted online travel industries and so many different, and it's still disrupting today, 5G, AI, everything, right? And cloud. How did you come up with something to bring this all together? And I read a story on this, but I want to hear it from you, where your wife's a mortgage lender and you wanted to put up your assets, the crypto assets up, as ownership for you getting a loan, and it turns out that they didn't want to recognize that or something like that. But was that when the light bulb went off and said, hey, you know what, we need to start a company like this that makes things easier, that recognizes crypto? But I'm curious to hear that whole story, other than reading it in an article.
Yeah, sure. So the story really starts in 2017, but there's a few key things that happened before that which I think are important to call out. One is that it wasn't like I got into crypto and started personally investing and instantly was, validated by the market. I actually originally bought Bitcoin at 300 and then sold it at 600 because I had doubled my money really quickly, and then ended up buying it back at a higher price. I had also invested pretty early into Ethereum, which I made an analogy in my head that Ethereum was kind of like an iPhone and Bitcoin was like a BlackBerry. But I invested in Ethereum, and 6 months after I invested in it, I was down 50%. But then late 2016, early 2017, the prices really started to catch some momentum, and that price momentum led me to get more interested and spend more of my time, thinking about it, reading about it. And when I was going through that kind of evolution, I was apparently talking about it more at home with my wife than she wanted me to be talking about it with her. So she said, you can have every Tuesday night, find a meetup or something, and go talk to people about cryptocurrency, because you're talking about it, more than I would like to talk to you about it. And I started going to those meetups, and two things happened. One was we were working on buying an investment property in Texas, and I submitted an application for the mortgage to buy this investment property, and I listed Bitcoin and Ethereum on my kind of financial statement that I submitted with the bank. And really, I was just curious, what they would say. And what didn't surprise me is that they said, we don't think the Bitcoin and Ethereum is worth anything. And banks still say that today, by the way. I'm doing this again right now, and they still have the same view. Well, those don't count as assets in terms of our underwriting of your financial condition. But what surprised me back in 2017 was that they also put me through a bunch of extra compliance kind of checks, and they, indirectly accused me of being potentially involved in some illicit activities just because I owned Bitcoin. And I thought that was very extreme. And so I had the idea of, crypto is going to need debt and credit markets, and it's going to need lenders just like every other asset class does. And banks aren't going to do that anytime soon. And so the next meetup I went to after having that experience and hearing that feedback from the bank on my mortgage application, I asked someone at the meetup, hey, do you think it would be a good idea to start a company that would, provide capital to folks who want to borrow against their Bitcoin instead of selling it? And the person that I said that to was like, that's the best idea I've ever heard. What are you waiting for? This thing's going to be so huge. You have to do it now. And so I went home after that meetup, and I told my wife, I think this could potentially have legs. And a week or so later, I let the company I was working at know that I was going to leave and start BlockFi.
All right, so let's get into BlockFi a little bit. So this is a platform that I signed up to. I noticed a lot of things right away, and let me bring it up here for everybody so they can see it and show everybody. See, isn't it nice? Got it up there while you can talk about it. But you basically have, I think it's like a three-prong model, and feel free to correct me on this. But you can use cryptocurrency to earn interest and up to 8.6%. We'll get to that in a minute. Also to borrow cash and to buy and sell cryptos. Are those the three parts of your business, or is it more to this? Because each one of them you do a great job explaining, and I could tell you, as someone who's in this industry, we launched a security token, one of the first ever to launch security token that it has equity stake. in our company, and also you get we pay a 1.7% dividend, and it's the only security token, I believe, that's trading on a foreign exchange available to retail investors. So I'm very familiar with this industry and analyzed hundreds, if not over 1,000 companies. I have to tell you, this is very simple. And one of the most important things, I can tell you have a sales background because this is a simple website and makes it easy. And when you look at some of this stuff, it's so difficult. So I want to compliment you on that. But I guess let's go into, some of the things that you could actually do on your site and why people should sign up for it.
Sure. So you hit the main product categories that we have available today. So if someone has an account at BlockFi.com or downloads our mobile app, after getting onboarded, you can connect to your bank account, purchase cryptocurrency instantly. You can also fund your account with cryptocurrency that you already have somewhere else. So you can buy and sell. After you've bought or funded your account with cryptocurrency from elsewhere, you earn interest on it. And we offer really attractive interest rates on both Bitcoin, Ethereum, Litecoin, which are some of the larger cryptocurrencies, but also stable coins and PaxG, which is a gold-backed token. So folks earn 6% on Bitcoin, 8.6% on stable coins, which are one-to-one interchangeable with dollars in a bank account, and I believe it's around 4% on Pax Gold currently. So in this yield environment, that's a really attractive proposition, both for someone that is looking to have exposure to Bitcoin and get a little bit of yield on top of that, or just for someone who wants to actually earn an interest rate on their cash in an account that's liquid. And then the last product, once you have a balance of BlockFi, you're able to borrow against the value of the assets that you hold at BlockFi, kind of like the Wealthfront portfolio line of credit or a securities-backed loan, except instead of stocks, the assets that you have in our account are Bitcoin and other cryptocurrencies. So you can get a loan secured by the value of your BlockFi portfolio at rates as low as 4.5% a year. Those are the three products that we have today. In the second quarter of this year, we're launching the Bitcoin Rewards Credit Card. I'll try and put it a little closer to the camera so you can see it.
That's amazing.
This will be the world's first Bitcoin Rewards Credit Card. 1.5% cash back on every transaction in Bitcoin. And there's a bunch of other benefits that come with the card. But the idea is simple, and I really appreciate that you called that out. We think that where BlockFi can play a unique role in the ecosystem, given our fintech and traditional finance backgrounds, is in making products that enable folks to interact with the cryptocurrency ecosystem, but in a way that they're familiar with. So earning interest, that's something that everyone is familiar with as a concept. You don't have to be a rocket scientist to understand it. Credit card reward points. Just about everybody these days is familiar with credit card reward points. And so we view our role as being a financial services company for the crypto ecosystem. And so our products all have that kind of flavor.
So I also want to congratulate you on your latest capital raise, which is to pay, I think it was a Series B, if I'm not mistaken, and some heavy hitters, right? I mean, I think you have Mike Novogratz, right, from Galaxy Digital. You also have Visa, which you just mentioned, Fidelity Investments. I guess two questions. I want to know personally if you could share that information. If not, it's okay. But I know your numbers, and we can get into them and how they exploded in the last year and how great you guys do in terms of users, sales, and stuff like that. But what is the thing that interests these types of institutions the most in your company when they said, wow, that makes a lot of sense to me? Is it just like the lending portion? Is it making it simple? Is it bringing everything together where we have all these users who want to get into crypto and this is the easiest platform to do it on, or one of the easiest? What are some of the things that they were most interested in? And I guess we could start there because the second part is more about, we're still in the early stage of institutions, right? I mean, you're hearing these big names, right? Visa, Fidelity, you could throw PayPal and Square in there and all the other ones and MicroStrategy, but it just seems like it's so small. And, I'm curious to hear from you, what inning is this in terms of institutional adoption? So two-part question. Hopefully, I didn't give you too much at the same time there, buddy.
Yeah, no worries. I'll talk about fundraising first, and then what we're seeing in terms of institutional adoption second. So I heard an expression recently which really resonated with me, which is a better word for venture capitalists would be sure thing capitalists. And our experience at BlockFi has definitely been that it's become a lot easier to raise capital the more market validation and adoption that we've seen in the marketplace for our products. So about a month ago, we closed our Series D round of funding. It was a $350 million round at a $3 billion valuation. It was led by DST and Bain Capital with participation from Tiger Global, Pilar Ventures, Anthony Pompliano, and Susquehanna. And in general, if you go to BlockFi.com/investors, you'll see the names of the folks that we're very fortunate to have equity backing from and partnerships with. It was not always easy for us to raise money, and that's where the sure thing capitalist part comes into it. The hardest round we ever raised for BlockFi was our seed round. We had what we thought was a great idea, and we were trying to raise our seed round in the third quarter of 2017. And if you rewind the clock, what was really huge in the cryptocurrency market at that point in time was ICOs. And at BlockFi, with our idea, we were kind of in this awkward middle ground where we didn't, we weren't planning on doing an ICO. We didn't really see a need for it on our platform, and we thought that it would come with some regulatory risk because things were still kind of getting worked out in that space. And so we were too mainstream for crypto investors who were basically looking for the next ICO to invest in. And then when we went and talked to traditional fintech investors, we were too crypto for them. They were like, "Oh, you're telling us people are going to be borrowing against their Bitcoin? This isn't even a real thing yet. There's no way that there's a big enough market for that." And so it's definitely gotten easier over time as we've been fortunate to have fantastic performance in terms of clients on the platform and revenue generation and all of those kind of key metrics that investors look at. But it wasn't always easy. And what I would say about institutional adoption is that we're still in the early innings in a lot of ways. So when we started BlockFi in 2017, it was a few months before CME futures were approved and launched for Bitcoin. I think that point in time was the first time where you really had kind of proper institutions who weren't just doing crypto, but they were doing other things too. Market making firms, trading firms, hedge funds start to get active in the space. And from that starting point, we've had a pretty steady flow of new types of institutions getting involved. And then it started to really accelerate around March of last year. And the reason it accelerated in March of last year is because of COVID and the impact that COVID had on markets, which I would say is two core things. Number one, the government response to the economic impact of quarantines has been to stimulate the economy with monetary policy. And you don't have to be a rocket scientist to use that term again to look at the M2 money supply over time chart and think that there's a higher probability of inflation a year or two from now than there was a year or two ago. And Bitcoin as an asset has started to be thought of by a lot of investors as kind of a digital version of gold, as one of its kind of investment properties. And as a result, that has worked out really well for the investment thesis and institutional adoption with that in mind. The other thing that COVID highlighted for investors is that everything digital kind of became preferred to its analog counterpart. So you'd rather be investing in Zoom versus like a landline telecommunications platform, or Amazon versus traditional retail. And a lot of these trends that were already in place kind of accelerated. And I think that the cryptocurrency ecosystem benefited from kind of clearly fitting into that digital, not physical narrative as well. And so today, you're seeing a much broader spectrum of institutions getting active in the asset class than what we saw in 2017 or 2018. It's shifted from being market-making firms and proprietary trading firms and hedge funds to also being corporations like MicroStrategy and Square and others, to being endowments who are investing in venture capital funds that are investing in crypto or who are buying cryptocurrency directly on their balance sheet. You're starting to see sovereign wealth funds, pension plans, insurance firms, all different types of institutional investors are starting to have exposure. And we're still in the very, very early days of this. So I think that we're maybe, 5% at best potential, institutions that will allocate over the next 3 to 5 years today. But the pace at which those decisions and that investment is happening has accelerated over the last year, and I think it's going to continue to accelerate. And that's certainly what we're seeing at BlockFi.
Yeah, that's incredible. And you brought up a good point too, where, we noticed that as well. I think to get adoption or to be able to scale, you have to have Wall Street kind of merging with crypto. And there was a point there for a while until recently where they hated each other, right? It's like Wall Street's like, hey, these are young kids and they don't have, established companies and whatever. And then you have these young kids and they didn't trust Wall Street. But, bringing it all together, you could see just what your company of what this could achieve. I mean, global scale, great partners coming in, huge demand for your products. And I want to talk a little bit more about, getting into some of those products. So let's start with the interest rate, because when I'm a finance guy for 25 years, when you see an 8.5% interest rate, and it's probably 5-6% on Bitcoin and Ethereum, I think last time I looked on your site, it's a very high interest rate. And people would say, well, how come banks wouldn't offer that? Or how come you're not seeing higher rates? How does that whole system work? What is the risk to the investor? And I know that venture capitalist firms would probably ask you that as well, to see what their risk is by just putting that in, putting their money into, BlockFi and earning that interest.
Yeah. So first off, there's an important disclosure here, which is that holding assets in a BlockFi account is very different fundamentally from a risk perspective versus holding assets in a savings account at a bank. The biggest difference is that at a bank, your assets are protected by FDIC insurance, and at BlockFi, they are not. It's kind of more like a private credit type investment profile. But that the interest rates are high is precisely because the crypto financial ecosystem is not well connected to the traditional financial ecosystem. And as a result, the cost of borrowing for market activities is a lot higher than what you would experience in traditional finance. And one analogy that I like to use here is the cannabis industry. So because there are some still federal regulatory questions being worked out for the cannabis industry, financing is very, very expensive. If you're looking to become a grower or a distributor or a retail storefront, you're not able to access the same types of bank financing that a traditional restaurant is, for example. And cryptocurrency is the same with the traditional example of securities. So the cryptocurrency market is very liquid. It's actually more liquid in some ways than the securities market. It trades 24/7 in a much more global construct than public equities, but it doesn't have access to the same financing infrastructure, and it's not connected to the traditional rails. And so as a result, if someone wants to borrow against their Amazon stock, they can do it at 2% a year, 3% a year, depending on what online broker they're using. But if you want to borrow against your Bitcoin as collateral on BlockFi, for example, the rates are higher than that, starting at 4.5% and going up to the high single digits. Those rates that we're charging borrowers are what we're using to generate the yield that we're paying folks who are holding assets in an interest account. And when we're talking about dollars, the borrowers are exclusively clients of BlockFi's on the retail side of our platform. And when we're talking about crypto, the borrowers are exclusively institutions who are borrowing Bitcoin and Ethereum and other crypto assets to conduct market making activities, proprietary trading activities, and to take advantage of arbitrage opportunities that exist in the cryptocurrency market. And BlockFi provides them financing the same way a traditional prime broker would in the equities market, except we're doing it in the crypto market. And we're not competing with traditional prime brokers yet. So the rates that we're able to charge are high, and we're passing the majority of that through to our clients that are holding assets in an interest account. One last thing I would say on the lending, we almost always get the question after explaining, at a high level how the business model works of, isn't this really risky? The cryptocurrency asset class is incredibly volatile. And the answer is that, yes, the cryptocurrency asset class is very volatile, but our risk management system was designed specifically for this cryptocurrency ecosystem. So we're operating 24/7. We're connected to all of the liquidity venues. And the focus that we've had on risk management from day one has enabled us to operate throughout our entire history without ever experiencing any lending losses. And so we've had perfect performance since we made our first loan in January of 2018 throughout multiple periods of volatility to the downside and to the upside.
Yeah, so I'm sure that you have like thresholds where even in the lending portion of the business, I was wondering where if Bitcoin fell to 40,000, 30,000, 20,000, what happens, right? I mean, it's this way, and I'm sure there's all the, just those checks going through, but I think that's the biggest concern, right? Because everything works until it doesn't, and Bitcoin's going higher. So, even the crappy companies associated with Bitcoin are going to do well, right? That's what we're seeing with a lot of ICOs and utility tokens. But no, thank you for explaining that. I think that's a big deal. I know it's a big question that people ask. I guess I want to ask you and maybe finish up here with what are the next stages for growth? As well as I do. I mean, to see your tremendous growth, and maybe you could talk about some of the numbers because I thought you were on a Series B round, you're on Series D, which I was wrong about. So maybe you could talk about your numbers that you recently published in your last capital raise, which are incredible, the growth of the past year. But then also, what are your next steps for growth? Because you said it's only 5% adoption right now, especially with institutions coming in, which means that you're going to see tons of competitors. You're going to see the bigger players start coming in as soon as we get more, regulatory issues taken care of in this industry, especially in the U.S. where the Goldman Sachs, Morgan Stanley will really go all in. And you know as well as I do that if you're not innovating, you could be the next AOL, the next BlackBerry, right? BlackBerry invented the smartphone. AOL was the way everybody got online, and they don't really exist anymore, or in that fashion. So what are the next steps for growth that you guys are focusing on? And please, I want you to share those numbers because they're really incredible.
Sure. So, just some of the super high level numbers year over year. About a year ago, we had 10,000 funded accounts at BlockFi. Today, we're over 300,000. We had around $1 billion in client assets on the platform. Today, we're north of 18 billion. A year ago, we were doing around $1 million in revenue a month. Today, it's around $50 million in gross revenue a month. So we've experienced really tremendous growth. And it's very clear that the competitive environment is going to become increasingly saturated. We've already seen fintech involved, and I think it's really interesting to understand that dynamic where the biggest financial company in the world by market cap isn't a bank, it's Visa. And Visa is heavily leaning into the crypto sector for a reason, and so are others like PayPal and Square. And so we believe fundamentally that our market is going to become increasingly competitive for the next decade because it's a growth area and companies want to be involved in growth areas. And the way we think about how we stay relevant and how we stay differentiated, given that backdrop, is by listening to our clients, building new products and features that will add value for our clients, and providing great client service, which we're, I think, pretty well known for in the marketplace today. There aren't a lot of fintech companies, and there certainly aren't maybe any other cryptocurrency companies where there's a phone number that you can call and talk to someone who's really, smart and nice and informed about the platform. But we've done that throughout our entire history of operating at BlockFi and continue to do it today. So in terms of categories that we're building into, payments is a big one. So we're coming out with the Bitcoin Rewards credit card. We'll be following that up with a debit card and a bank account offering, and then following that up with peer-to-peer payment functionality. We'll be adding incremental traditional currencies to our platform as well. and we'll be looking to diversify the kind of ease of use features on our platform. So, being able to kind of set it and forget it, and set up unique portfolio allocations, and automatic deposits or automatic withdrawals, just making things as easy for our clients as we possibly can. Having different account types, accounts for minors or retirement accounts be supported on the platform. There's no shortage of things for us to build that we think will add value. The thing that we really struggle with sometimes is the prioritization of these items and getting them done as quickly as we can with a really high level of quality. But we think there's still tons of work to do and lots of exciting stuff that we'll build. And we think that 5 or 10 years from now, companies like PayPal and Square and Visa are going to continue to move into the cryptocurrency world and offer products and services in a cryptocurrency context. But we also think that the biggest and most successful cryptocurrency companies, of which we intend to be one, will move into the traditional financial services world and start to compete head on with the PayPals and Squares of the world in areas that used to be kind of exclusively thought of as traditional finance and not crypto.
Nah, that's really great stuff too. So 50 million in sales per month, you said? That's the latest numbers?
Yeah, gross revenue.
Wow, that's amazing. So, those guys got a bargain at a $3 billion valuation, I think. So they're going to be pretty happy. But that's just incredible for you. So I guess, we have time for one more. Where is the next, like something that interests you within crypto? Because like you said, the hardest thing is to prioritize, right? Because there's so many growth avenues and it's such a new industry, right? And you feel like you could be a major player in so many different things. What are your take maybe on NFTs, tokenization? Is there any other cryptos out there that you see that you're like, wow, these guys really are doing something that's special? But, do you guys invest in things through your company? Do you look at things like that? Or do you see, maybe NFTs, tokenization, or any of that stuff really, taking off?
Yeah, I think, after closing our Series D, we've officially launched kind of a corporate development function within BlockFi, which is going to be responsible for investing in other companies, looking at acquisition opportunities. And so we're definitely starting to become active in that area. I think that the thing that I'm really excited about is stable coins and infrastructure that facilitates greater scale in terms of transaction processing relative to the cost. So I'm very bullish on Bitcoin. That's primarily how I'm allocated personally in terms of what cryptocurrencies I invest in. But I'm also really bullish on the distribution capabilities of blockchain networks as it relates to dollars and other major currencies. I think that these things being more available than they have been historically, powered by cryptocurrency networks, is going to be a net positive for global society and create kind of more freedom and connectivity around the world. And so I guess I will call out one particular thing. I haven't done a ton of work on this, but I'm starting to look at it a little bit. There's a blockchain called Solana, which I think intends to be similar to Ethereum in terms of the programming language, but with higher throughput at a lower transaction cost. But I'm very bullish on Ethereum too. DeFi, NFTs. I think that there's just so much momentum in so many areas where we're already seeing early signs of mass adoption for something that's not just investing in cryptocurrency, but actual applications being built on blockchain rails. And I think that those applications that are already working well, stablecoins, NFTs, DeFi, I think those will continue to work well, and we'll see new ones. So there's a lot to be excited about.
No, really great stuff. And Zac, I want to say thank you so much for coming on. I know how busy you are and you travel a lot, doing so much, and your company's growing. So it really means a lot that you chose our podcast to come on. It's really cool. And
I wish I traveled a lot. to interrupt. I wish I traveled a lot. I used to travel a lot.
Hopefully that's going to open back up. I think we're all going to have, I don't even go to the vaccine part, but I think we might need a card for vaccines. I won't even go there. It's a whole other conversation. But if someone wants to learn more about you, learn more about BlockFi, how can they do that?
BlockFi.com is our website. I'm pretty active on Twitter. My DMs are open there. My handle is BlockFiZac. And like I mentioned earlier, we've got a phone number and great client service. We love hearing from folks, so don't hesitate to get in touch.
All right, sounds great. And hopefully you join us again soon. Take it easy.
Thanks for having me.